Welcome, everybody, to the SNN Network Canada virtual event. I'm your host, Robert Kraft. On behalf of SNN Network, we'd like to thank you all for joining us here today. And I'd like to introduce our next panel here at the event. This panel is titled MicroCap Technology Growth Companies, and it will be moderated by Sharon Wang, who is the Senior Investment Analyst at PenderFund Capital Management. And with that, Sharon, take it away.
Thank you, Rob. Thanks, everyone, for joining us. So this panel is all about microcap tech growth companies, and joined with me here are three great companies. So Rob K. Chase from MediaValet, Executive Chairman and CFO. Ali Tajskandar, I have to make sure I pronounce the name right, Ali, and he's the founder, chairman, and CEO of Wishpond Technologies, and Alvaro Pombo from ProntoForms. He's also the founder and CEO. So these three companies are all current holdings in our Pender portfolio, and they share some common characteristics. They're fast-growing tech companies having a predictable revenue model with really attractive unit economics, large end markets, long runway to compound, and most importantly, they're at early innings of the growth. In my humble opinion, they have the potential to be a lot bigger in size and value. So there's actually data suggested that in the long run, it's not the valuation multiples, it's not the profit margins, actually it's the top line growth that accounts for 75% of the stock performance for 10 years. So that being said, let's hear about them talking about themselves and their business, and then we're going to have an in-depth discussion on growth. So to start off, Alvaro, can you please give us a 2-minute elevator pitch? Tell us about what ProntoForms does and what problems you solve for your customers.
Yeah, Sharon, thanks first of all for the opportunity of being here. Robert, same to you. It's good to be in such a great company, trying to evolve our own little stories, which are not little anymore. They keep on growing and keep on evolving. So Sharon, we're in the business of helping these guys behind my screen here, okay? Field people. And those are very valuable individuals for organizations. They manage complex equipment, they manage difficult tasks in the field, and we make their life easier. And those are the heroes, and the people behind them, which are the people that support their infrastructure, we enable them to make workflows easier, no code, easy to deploy, easy to iterate. So I work for those guys as well as for our shareholders.
Great, Alvaro, nice to hear that. Rob?
Thank you, Sharon. And yeah, MediaValet, we're in the digital asset management space, which is looking after all of the content that we're creating in order to go to market digitally. So we're really supporting the digital transformation foundation of organizations, which, as you know, as we're sitting here on Zoom, all being remote, is more and more important to organizations if they're going to be successful. So at the heart of what we do, we provide a central repository for all of the digital content, enable you to manage it, secure it, make it globally redundant, enable to apply AI principles to it so you can find the right stuff at the right time, make it available to all your end users to democratize your go-to-market assets, and just do a better job of marketing in a digital world. So riding a trend that basically has our industry growing from about 4.3 billion this year estimated to about 10 billion by 2026. So pretty exciting tailwind as organizations just have to transform digitally in this day and age.
Thank you, Rob. Ali, what are you up to?
Yeah, so at Wishpond, what we do is we have a platform which is an all-in-one marketing platform for small businesses. And what that means is that for small businesses, the main challenge that they face is that they know they need to be online. They have to run their business online. They need to be able to acquire customers online, where they're spending time right now, but they're busy running their own business and they're not marketing savvy and they don't have a lot of financial resources. So our solution to that is bringing and having developed a lot of the technology that they need for running their business online and acquiring customers in one single integrated cohesive platform, and also give them service help when they need it at affordable prices while keeping good margins for ourselves. And that's what we're doing. We're serving thousands of small businesses and is resonating with them. And we're very happy to be able to serve them, because realistically, what we see is that they're in a bit of a no man's land where they're not attractive to your average agency that wants to charge $5,000, $10,000 a month. And they can't really get the value that they need using silo individual marketing technology tools that exist out there, because that's not their craft.
So digital forms for field workers, digital asset management, and digital marketing automation. Seems like all three of you are riding this digitization trend. Can you talk a little bit more on what market opportunities you have in front of you, and your strategy to address these trends? How do you see your business fit into these trends?
Is that for me or for?
Let's go alphabetically. Ali.
Go ahead, Alvaro.
Almost, huh? No, I'll go ahead. So look, our market, I always say that over the last few weeks in the US, they just signed a big infrastructure bill. Many bills have been about to be signed, but that one was signed. And what does translate into? I mean, it's $1 trillion investment in doing what? We have to rebuild this planet, okay? Why? Because it's parts of it has been built for a long time and they need to redo that. And other parts, environmental issues, compliance issues as well. So all these things ultimately implies a rebuild. That rebuild is done by those guys behind me. And the reality of those people is that when I look at the infrastructure bill, I mean, 70% of the line items that I looked at, we have customers in those spaces. So what's the challenge at hand is work instructions. They have to inspect very sophisticated equipment. They have to do a variety of things in the field that in the age of digitalization, and it has to be easy. It's very hard to find a programmer in downtown Toronto or downtown San Francisco. Imagine in one of the boonies areas, okay, at the edge of the organization, almost impossible. So you have to be able to program these workflows, develop them, and put them to work fast and easy. Now, the automation behind the scenes, the equivalent to the ERP, the back office system, the field service lightning, the environmental health and safety systems, and the same with the asset management systems, has been taking place over the last couple of decades. And right now, with those pieces done, you're trying to do what? Reach the people at the edge and enable them. So I always use the analogy that we, white collar workers, we went through all of this automation before. And what happened to us is that we ended up with Microsoft Office being a pretty good place to automate, to create, to do the tasks that you need. I hope we'll end up being as big as Microsoft Office, okay? But conceptually, this is that round of automation that is going on in the field, and we're riding that wave.
Wonderful. Keep riding. I love it. On that note, you know, again, same trend as Sharon mentioned, you know, digitization of the organization means that's how we reach our stakeholders. That's how we inform our employees and find our prospects. You know, we have to have a great brand out there digitally if we're going to be successful. And I think that organizations are starting to understand this. It was already a trend we were experiencing prior to COVID, but as COVID is now hit, of course, we've all gone completely remote. And so it's even more important today. It's becoming incredibly important, even when we think about onboarding employees, for example. Traditionally, you know, it was still face-to-face first, even though the infrastructure has been there to support people digitally. But the remote case was always secondary. But how I see this trend that we're going through and what COVID has caused is we have to be digital first. We have to assume that we're not face-to-face from the get-go, and that changes how we approach business. That changes how we reach people. And ultimately what that means is we're going to be creating tons of content. Basically, every single organization is effectively becoming a content house because they all have to have fresh content that is dynamic, that is on point, that is branded consistently, that is right there at your fingertips to reach your potential customers, employees, inform people, etc. So without that, you're just you're going to get left behind. And what you see is, I'll give you an example of, a major airport authority that we recently signed. They had 20 terabytes of content that the marketing team was trying to manage between SharePoint, Dropbox, and local drives and servers. Now, imagine trying to manage 20 terabytes when some of it's green screen videos that get put into little clips that go on the backs of the screens on the planes, that goes in the in-flight magazine. Some of it's going to have to be posted up around the airports and on things like the Up. And also then digitally reach your partners and customers, etc. So, and marketing's job was basically full-time, just managing and trying to find that content. And of course, when you go to find it, you can't find it because, well, it's on someone's drive, right? So you recreate it. When you just think of the cost of trying to be effective digitally and how far behind you fall if marketing's your fail point like that, with respect to getting access to these things. Flip that around into a world where you have a digital asset management system that takes all of that content, gives it a central repository, makes it accessible to everybody in the organization, connects it to your marketing stack of tools, connects it to the foundational layer of IT stack as well. So, that makes you, according to IDC, it'll reduce your cost of managing your content and providing content by 85%. It'll increase your revenue by 25% because you're more consistently branded, on point, on time, the right place, the right time, and also reduce your risk of being fined for using assets you're no longer allowed to because you didn't even realize it, right? So, it really, organizations are starting to realize that they must have this, and we see it at the top of our funnel in terms of organizations today that are looking at it. More leads are coming to us than ever. They're taking longer to get down through the sales funnel simply because in COVID times, we're still having people here be a little bit more cautionary in taking on new projects. So a lot of them are getting ready to go, but haven't yet been able to hit the go button. I think that'll change over time. In the meantime, we just need to keep ramping up how we get to access to the ones that are ready to move, enabling our salespeople to get to their potential, their capacity, and maintaining our existing customers with 100% plus net retention. And we'll have great opportunity to continue to outpace this market. We've got a 47% 5-year CAGR. Riding this, grew about 33% this year to date in US dollars in annual recurring revenue. So, we've got we're outpacing the growth in the overall market and expect to continue to do so with some nice tailwinds for us here moving forward.
Great. So Rob, you have been managing all the back end of the marketing department, and it's Ali, your turn to tell us how you manage the front and the customer-facing part of the marketing.
Yeah, for sure. I mean, what I'm hearing from Rob and Alvaro is very interesting and is resonating deeply with my observations and experience with our clients as well. But I think one of the differences is with the segment that we serve, which is really small businesses, there are differences that you would see. So about 20 years ago, transformation and going digital started for consumers. And it takes a while for businesses to follow. But when that happens, usually it's large enterprises that follow first because they have the resources, they can spend money on it, they have their own developers, they have dedicated people, and they can also train them and send them on training programs and so forth. And that's the first wave that comes. And large businesses have done that relatively effectively, having marketing teams using best-in-class marketing software and online business management tools. And then at the tail end of that is where the small business happens, which is, well, we don't have a ton of money and we don't have marketing professionals or dedicated professionals to do any of these things. And what do you want me to do? Do you want me to drop serving my customers to now become a professional and learn how to design and learn how to market? And online is a level playing field, which is powerful for all business owners, except it also means that even as a small business owner, the expectation from consumers is quite high. And if your assets, if the service delivery, if optimization of how you're performing everything online is not up to par with the best companies in the world, you're not gonna win. And the difference between positive ROI and negative ROI is very thin. So that's what we see, that that they need a cost-effective solution. They need an all-in-one solution, and they need service expert help as well. So those are all the things that we've seen helps, and we're providing to them. And to us, that's very exciting because it's also greenfield. Oftentimes when we're talking to our clients, we don't have a ton of competitors. They're not comparing us against HubSpot and Marketo and all that. They're comparing us against doing nothing or an agency they used a while ago. And that's straightforward to win.
Great, love to see that you're not competing in red ocean, but in blue ocean.
Right.
So we talked about, like, you all have huge market opportunities, a big total addressable market out there, and you seem to have a pretty good product market fit. So let's try to dig a little deeper on how you differentiate yourself from your competitors. What are your selling points? Alvaro, take it away.
Yeah, I'll continue with the same configuration, no problem at all. Look, our selling points are, number one, simplicity. We have people that claim that they can do it, and they go and they try to do it, and the implementation is a disaster. Why? Because they conceived it the other way around. We conceived it with the requirements of the field being paramount. Number two, the requirement of the people supporting the field. So it's not conceived with an IT. I used to be a CIO. I love IT. Great capabilities there. But this comes from the other side. It's totally different. So really, I mean, what our key selling points are, that simplicity, enabling that safety, and the efficiency, the ROI that we enable is incredible. Plus, there is an emerging thing that has been going throughout the years with our customers, which is there is a multitude of use cases that the product expands extremely well inside the organization. So Group A starts saying, hey, I can do this with ProntoForms. Group B starts saying, oh, I also did it with ProntoForms. And there is a multitude of use cases that start replicating throughout the organization, both geographically as well as use case driven with different groups. So, so that's the value. That's the proposition is, look, you just make an investment once, it grows very well, it plays very well in the middle, because we don't try to be these back office complicated things. And is that kind of, I don't know, I call it simplicity and elegance of how we do it. That is the main value prop and the main thing that attracts our people and retain them, which is important, obviously.
Yeah, Alvaro,
oh, go ahead.
Sorry. So Alvaro, so when you go out there and meeting with a new customer, and what you're trying to replace their solutions, are mostly still paper-based and very cumbersome process, right? So you're still competing, like you have a lot of greenfield opportunities out there as well. Yes,
look, it's the best seller of these things. We're trying to become much better sellers at expanding, as I said. Okay, it's a very different skill, as many of you know, and a lot of people in the audience. So, like, I mean, you started in the SMB, mid-size, then enterprise. You get in relatively easy with good partners, and we're very good at partnering with key providers. And once you're in, people start seeing the capability, as I said before. As you start to expand, the good news is that you find in some cases an old solution that they build that they cannot maintain, okay? In other cases, greenfield, paper, hey, the IT automation never got there, okay? They spent the $50 million on the first part of the story, and the last part of it, which is the last mile where most of these use cases reside, it's beautiful. And not only that, at the end of the day, if you look at it from a perspective of our hero, the technician, is at the end of the day, all these different solutions start to become a part of a whole, and it starts to become the digital tool belt, if you want to use a fancy name for it. I always say that Microsoft delivered integration between multiple solutions with Control-C, Control-V, copy and paste, okay? Sometimes cut and paste. And it was kind of clumsy, but just having the same concept and looking at all these processes in the same way Ours is not as clumsy, actually. It's actually very elegant. The context move around and you get to that next level of engagement with the customer.
Great, thank you, Alvaro. So Rob, you actually touched upon how streamlined and beautiful your solution is going to be. So can you tell us a little bit more on how durable you think your competitive advantage is? What if new players come into the market? Like, how do they compete with you?
Great question, Sharon. Thank you. Yeah, we are actually known for our innovativeness and how we look at the market. So part of what's made us successful is obviously we've gone out to build an enterprise to an enterprise use case fully in the cloud, but one that can actually be easily deployed. Our smallest customer is 6,000 a year US a year. Our largest customer is 508,000 US a year. So we actually have been proven to be able to be adaptable to just about any size of organization, which is phenomenal. And that's really kind of the dream of cloud, is to be able to make it accessible to everybody, yet still make it as complex as it needs to be. But the interesting thing is we've set out to be innovative to make the complex easy. And I think we've done a really good job of accomplishing that. And we've earned ourselves in the industry a name as one of the most innovative dams on the market. We've a number of times have been first to market with features within DAM that nobody else has. And, our AI is a good example. Everybody now has AI within their DAM. The difference is most of them are plain vanilla. So, being able to tell a tree or a person or a building, big deal. If you don't sell any of those things, who cares, right? So, but if you can teach your AI to differentiate between, say, an iPhone 8 versus an iPhone 10 versus a Samsung versus, well, now someone like a Verizon's going to be really interested in making sure they've got AI that can do that. And that's going to be a huge differentiator, right? So that's the way we approach AI. We call it our guided AI, and nobody else has that level of AI granularity that we have. And we're continually bringing out new features that show that innovativeness. And I like to think that the reason that we have that, and that is where we get our durability, the reason we have it is because of how we've approached the market, because we've always sought to be nimble and to partner with our customers. Internally, what we call that is we care, and a very Canadian thing, but we care about our customers and their success and making DAM work within their environment. We're known as the highest adoption rates of any DAM in the industry. Meanwhile, you look at legacy systems, so DAM's a little different, and it has been around for 30 years. There's a lot of on-prem type solutions and things that just can't do the digital aspects that people do today. And we haven't even started really touching that market yet. We've been doing the Greenfield. 85% of our sales are Greenfield, people that never had a DAM before. And so, there's so much opportunity. The legacy will come up eventually, but because we're nimble, because we're innovative, because we're cloud, we're easy to use. We also have a full application programming interface that enables you to basically turn us into a headless DAM and plug us entirely into anything you have. Colliers has done that as an example. Not everybody has the resources to do that internally, but we'll eventually develop MediaValet into a headless DAM as well. So, it's that innovativeness, really, we can't, undervalue that. At the same time, there's a few things we do provide out of the box that are different. One of those is unlimited users, for example. So our idea is that you want to be able to democratize your digital assets. Why would you limit the users that could access this thing? This thing really starts to sing if every single employee in the organization can easily access the latest and greatest branded assets of the company and take them to market. So, they need to do a quick tweet on social media, boom, it's at their fingertips. They don't need to go to marketing. They don't need to go to someone who has a seat. We don't want our customers worrying about that. We want to be fully adopted across the organization. Everybody use it. We do unlimited help, unlimited support, because we built it easy as well. And we've been able to provide that to customers, to maximize adoption. Meanwhile, those legacy enterprise businesses, according to a study from Gartner a year ago, only 26% are happy with the adoption levels of their DAM. That will become low-hanging fruit for us as that market turns over. But today, that's also how we're winning the new business.
Perfect. Ali, take it away.
Yeah, on the same question, I think what we've seen is that obviously the markets can change and new entrants can come in, and existing players can move into different markets. They can go up or down or bring new solutions. So I think that's unavoidable. The way we look at it is a number of ways. One is that when you look at the small business market, and we currently are serving 3,000 clients. There's millions of them out there, right? We're talking about 30 million just in North America, and there's no reason to limit it to North America, even though that's our biggest footprint right now. So even with other players, we see there are some competitors of ours, and we almost never have collision with them because of how large the market is. So that's the first thing. There's a lot to unpack, and there's a lot that we can help with, and a lot of clients to onboard with that. The second part of it, I think, goes back to what Rob said, which is I think ultimately the organizations that do well across a long span of time are the ones who are nimble and are able to adapt. When we started, we actually started quite differently. At some point, we were all about Facebook contests. We were about we were about Facebook stores, meaning that we help local retailers bring their inventory on their Facebook tab and, give it visibility there. And then we started developing Facebook contest tools, and, after that, expanding from that. And then we saw the writing on the wall that Facebook tabs are going to go away. Facebook will want to take away from engagement that business pages are getting, and they're bombarding all the feeds of the average user. And I think what helped us escape from a potential catastrophe there was we anticipated that and stayed out of that and said, what, we need to actually be much more than Facebook. We don't want to hang ourselves to an individual platform like that and have our destiny be something that is at their mercy. So those are other important elements as well. The other part that I think increasingly becomes a bigger and bigger dam for other competitors to climb over is your average business that wants to run their business online and have marketing online needs a number of things. They need to build their website, so they go to Wix or something like that. They need to build landing pages for their advertising. They use Unbounce or Instapage or Lead Pages. They need email marketing. They use MailChimp or Constant Contact or someone else. They need some kind of pop-up functionality. They use Opt-in Monster. They use WooForms or something else for their forms. They use another platform for their CRM, another platform for their lead tracking, another platform for all of those things. And one of the things that is key in the story of Wishpond is if we onboarded you and we have built all of those functionalities native and they work really well together, well, now it's going to be quite damn difficult for you to replace us with so many different systems and gel them together. Just on the cost side is going to be a very difficult one. So that becomes also a barrier for competitors. And as we expand organically, developing more functionality and acquiring other companies and accelerating our rate of innovation that way as well, it becomes more attractive for us and more defensible.
Great. So let's circle back on some top level growth topic. Like, how do you guys think about growth? And there's so much opportunities out there. What are you going to do to capitalize those on those growth opportunities? Organic, acquisition, or both?
Yeah. So I'll give it a shot. Look, the way I look at the market, I have to describe where we're at. Okay, so we are $20 million, give and take, US, all the numbers, ARR. We have multiple segments within that, but the main segment is enterprise. We've been moving up to the enterprise. The enterprise market, I have 165 customers of more than 2,500 employees. That market, we have a net retention of about 120, north of that in separate quarters. And with a cost of acquisition that is is very good actually. So when I look at it and we said, okay, what do we have to do? We have the customers. I was talking about how the product expands. I am squarely focused on expansion and enabling the orchestration of the expansion. These are large expansions, okay? We have customers with more than 10,000 subscribers in the field. These are big numbers, big deployments, big organizations. So we're just squarely focused in doing more of those because we have the base, and the base with a few use cases, and we need to enable them to traverse quickly. And then we will all be very well off if we do that, okay? So we're just focused there, keep on growing that way. The company was growing at about 30% year over year. There was a COVID had an impact. I mean, some of our customers are not in business, or they're, I don't know, air companies. Can you imagine? So yes, there was an impact, and we're getting back up. And our objective is to specialize that motion right now. I don't think we can acquire anything at less than 5, 6, 7 times revenue. So if the cost of acquisition is 4 or less than that, and I have already existing customers with a great lifetime value, I'm just focusing in mining these guys, and that's my sole focus right now. And the entire organization, we're about 170 people funded and going after that very clearly. Later, as we get to the next level, we will look at other ways to grow, and obviously we'll consider them, and we're keeping an eye on them. And there could be talking technologies and things that can accelerate the building of that tool belt that I was referring to. But right now, very focused on what I just said.
Great. Yeah, you always start off so great, Alvaro. Thank you. Yeah.
But I finished terribly, Rob.
Oh no, start us off. No, you finished great. But similar situation. There's so much organic opportunity for MediaValet. As I said, most of our business is Greenfield today, and in the future we'll see that open up more and more as some legacy systems start to come out. So really laser focused on making sure we can generate the pipeline that we need to get our sales folks to their capacity, and continue to build out those differentiating features that are going to keep us, build that moat around us, just continue to do what we're doing. So that's the core focus. That said, DAM is a fragmented industry. As I said, it's been around a long time. There's some stagnated on-prem systems that just aren't going to, really thrive in today's digital climate and cloud climate. So maybe there's a chance to roll up some of those eventually, get some technology, acqui-hire type of approach as well, and things like that. So we'll be looking around to augment that growth if we can. And really that comes back to a key point here. We've just surpassed the 10 million in ARR mark. We're just about to hit 100 employees. We're at a scale now where we've got the people to go and explore some of these amazing opportunities that can accelerate growth, whether they be on the partnering side to accelerate there. We've just announced some really good partnerships, or they be acquisitions or other means that we can find. But this is a magic point in the evolution of many SaaS companies. You look at folks like Docebo or even Absolute, where I was previously. Once we surpass that 10 million in SaaS, oftentimes they're going 10, 18, 40, 70. Really, there's so many examples of that. And that's because you're at that scale where you have the people to now consider some of the, not just the organic, but you can start to look at some of the inorganic opportunities and some of the unique partnering opportunities to leapfrog. So really excited to be here. Can't tell you what they are today, but I can tell you one on the path to finding out. So take care of the organic and then capitalize on some of these accelerator opportunities now, given we can.
I'd love to hear this disciplined growth strategy. So we have a full spectrum here from Alvaro, majorly organic, and then go to Rob, like taking care of organic and then capitalize on mergers and acquisitions. And Ali, I understand your company already had a history of combined growth from organic and merger and acquisition. We'd love to hear about your perspective on this.
Yeah, this is quite interesting. I mean, we're new to the public markets. We went public December of last year, so it's the anniversary of it is coming up in a couple of days. as a private company, we never made any acquisition. It was always organic. And for years, we had 35, 40% year-over-year growth. A lot of times that growth, as impressive as it is, was limited by the organic cash flow that we were producing because we were not VC funded. It was mostly bootstrapped. Now, fast forward to now, we've had a number of solid quarters since going public, and just Q3 numbers, we announced them last week or recently, and we grew by 90% year over year. 4 million revenue for the quarter, ARR of 16 million, conservatively speaking. And half of that is coming from organic growth and half of it is coming from inorganic acquisitions. And in the area of organic, we've had two major buckets, inbound and outbound. We started being all inbound. We actually, to be honest with you, we had a bit of a disdain for sales and sales process and salespeople in the early days of Wishpond, unfortunately. But and our inbound was all about content marketing and producing thousands of blog posts and webinars and infographics. And we have a partnership with a company called Stuken, through which we're part of marketing textbooks that are taught in universities in North America. And as a result of a lot of those, we get inbound interest coming to us. At some point, inbound marketing was all of our revenue. Then we started adding outbound and doing cold prospecting and reaching out to folks, and that started growing and growing, and that was a lot more scalable. Now I would say probably 70-80% of our new business revenue comes from outbound, and it is kicking and is quite solid, to the point that very recently we had to actually tell our BDRs to kind of calm it down because they were booking our salespeople 2 weeks in advance, and that creates its own issues. There's more no-show when you're booking people a couple of weeks in advance and all that, and we had to kind of do that. But the outbound has been a major part of our growth strategy, and it's very scalable. $1 investment in our sales gives us $3.5 return in the same year. So it's just a matter of investing in that. And as we're investing and growing our sales team, last year we had 12 account executives, this year 24, next year doubling that again. Organic growth continues. The second large category of our growth is acquisitions. So we've done 3 acquisitions since going public, and it is a new area for us. We're wrapping our head around it rather quickly and kind of trying to catch up and get good at it. But it has been quite fascinating because these are companies that, with some patience and discipline, we didn't overpay for them. They're profitable companies. They create upsell and cross-sell opportunities with the rest of the organization, and they're contributing to the bottom line. And what has worked within Wishpond in terms of sales and marketing, we're actually installing for these companies that we've acquired. And that was part of the criteria that we wanted to have, recurring businesses that we can grow with the same sales methodology. And because of that, even the inorganic, as soon as we get them, we put them on the same organic growth treadmill so that they also grow at the same rate in the future. So that's the way we're looking at it right now.
Great. So, we all talk about the strategy, and but in real life, there are situations where you need to make the decisions, and it's a case by case, decision. So, do you guys have any internal process that can make sure you follow your growth strategy, or maybe even better, you can give us some real life examples to show how you actually make those decisions? What are some of the trade-offs when you make those decisions?
So look, Sharon, I'm probably too disciplined sometimes, and the way we have a very clear strategy and a very clear set of metrics, very numbers driven. We have measure a lot of things, and ultimately we're trying to make investments that are sound as a trade-off between, you have to have a critical mass for these expansions again, which is my key piece of the story. Okay, so we look at the margin, we're 90% margin. When you look at the utilization of these resources, we don't do a lot of scientific projects, okay, which is very driven on where we're putting it, what kind of result we're getting. And so we optimize it. And once we're optimizing some of them, we're going to be deploying more and more of those pieces that are working. So it's been a journey, okay, of partnering, going through operators, going through different things as we've been fine tuning the go-to-market. I think we have now something that we feel very comfortable with, ready to press the gas pedal harder on it. And we're doing that as we speak. So multiple KPIs, but very common sense. Okay, what's the cost of new? What's the cost of existing by each of the different markets and by each of the different sources of those leads and expansion activity? And we measure that sometimes too much, to be honest. But anyway, that's how the brain operates on this side of the equation. So that's how we're implementing.
Actually, these are a great attribute for outsider CEOs because they're very number driven. If you ever read that outsider CEO book, you see that's one of the common characteristics of that. Those are like music to my ears. Rob?
Thanks, Sharon. Yeah, and it's a great question. I mean, interesting too, because you talk about discipline, but at the same time, as a smaller organization, you have to stay nimble. We're going back to kind of what Ali said earlier. They've had to pivot along the way, and every organization is going to have to pivot and figure out what the changes are and adaptations are that they need to do if they're going to be successful. So part of that for me is making sure you have leaders also that have skin in the game, because that's one of the things that tell you, like, are they going to stick and stay and put the hard yards in to think it through and find the unique advantage and direction you can go. So you have to, whatever structure that we put in place, and it is obviously everyone's numbers driven, what gets measured gets done. So you got to make sure you're measuring the right things, but you also have to maintain some core of nimbleness. And the way that we've memorialized that is basically a cross-functional leadership team gets together every 2 weeks and goes through our pipeline. I mean, where this happens for a business like ours, B2B, is you have to make your salespeople successful, and everybody in the organization needs to understand that. So you can't have, say, technology thinking they're just building Taj Mahal, right? You need to have them understanding what the use case is and a connection to the customer. So the only way we find to do that is to bring everybody together into a regular meeting that goes through that pipeline and talks about what features do we need to win these deals, and bucketizes those features and says, what are the biggest return? What's the biggest bang for the buck where we could spend our time? And in a world of agile programming, we're able to jump and change and do increments of each of these things along the way. So when we start out at the beginning of the year, absolutely, we have a clear plan of what we think is going to deliver our number. But midway through the year, we may change because we're learning as we go every single quarter. And so I'll give you an example. Having just announced Microsoft as a go-to-market partner through their Microsoft Azure marketplace, that opportunity came to us in August. And when we saw what Microsoft was changing, i.e., they dropped their commission rate to 3%, they give salespeople full credit on deals that come through, and they now allow customers to use their excess credits on their Microsoft Azure contract commitment to buy other solutions through the marketplace. So it's not uncommon to have $50,000, $100,000 of leftover Azure credits at the end of the year that go to zero at the end of that year. Now you could buy something on the marketplace for 50 or 100 grand. So, because of those changes, we actually retooled, stopped doing some of the things we were doing, and accelerated that opportunity. And by October, November, we had it launched. Likewise with Monday.com, came up midway through the year. And because of, another partner that was sort of going through some internal issues, we shelved what we were going to do with them and instead accelerated Monday. So, really part of this is being able to go and assess opportunities on a regular basis, look at how much value you can drive with the levers you can pull, and being nimble enough to jump on something that's going to make a difference now, provided that something is on your overall path. And for us, we're looking at a DAM maturity model of what we want to deliver to customers to enable DAM to be omnipresent in their environment, to the point where you could be typing an email and DAM is contextually serving up assets beside your screen there, just the way that Google finishes your search sentence for you, right? So I'm typing, hey, Sharon, here's MediaValet's Q3 results, and boom, up on the right, all of a sudden is my investor deck. Up on the right is the press release. Up on, you know, it's actually discovering it as I go. And if something like that is in the hands of all your employees, you could just imagine how powerful that could be. So we're working towards unlocking that. And as customers desire features that are on that path sooner, we then supplant that from our long-term plan to get it done now. And so interesting, how do you have the discipline to stay nimble at the same time as stay on your path? And that's, I think, what we've done with this process.
Yeah,
thank you, Rob.
Sorry, go ahead, Sharon.
This is why I love to hear, stories from all of you, because you are the founders of business, or founder-like, that meaning, being instrumental to rebuild the business to this current stage. And, that's why you can have this long-term view when you are able to invest for the long-term view to build business value. And at the same time, you're all significant shareholders of the business. So that makes sure, you're fully incentivized and aligned with shareholders. It's time for us to wrap it up. And just to tie in our investment process at Pender, we're trying to focus on identify early stage companies that has a large TAM, a quality team, and a long runway to compound growth for years to come. I'm very happy to have all three of your companies in our portfolio, and I really believe that you all have the potential to become a lot bigger and in size and value, and have the potential to be the multi-baggers. And just to bring to the attention to everybody that all these three people have not mentioned stock price even once at this session, which is great, because that's what founders like to do. That's what the real leaders of the companies are focused on. They're not really focusing on stock prices. Eventually, the business will catch up. The stock prices will catch up on the business value, and we will see great returns for all shareholders. Thank you very much, everyone, to being on the panel, and thank you everybody for listening in. The one last question: where can we find more information about all of you?
ProntoForms.com will be the best place, and you can reach out to myself, our CFO. Any of our management team will be happy to tell you more about the story. And thanks for the opportunity, Sharon.
Thank you, Alvaro.
Yeah, thank you very much, Sharon, and thanks everyone for being here. For Wishpond, you can go to wishpond.com, or if more specifically you want to learn about, or download our investor deck or anything along those lines, you can go to wishpond.com/investors.
Yeah, absolutely. The website's the best place, and the door is always open. It's imperative to us that we're here to help educate and inform our shareholder base, and provide the facts, help you with your assessments. So we're always happy to hear from our shareholders, and don't be shy about reaching out.
Great. Thank you, everybody. Thank you very much, everybody, and enjoy the rest of the session.